Usual, we just start off with our disclaimer. So trading involves the risk of loss of capital. It's not suitable for everyone, but of course we hope it is for you. Many companies will provide you with leverage, so just be aware that you can lose substantially more than that initial investment that you make. The views, opinions, information contained in this is just purely for educational purposes. We're not trying to encourage you to trade or invest. That has to be your decision. And of course, you should carefully consider the risks, your financial situation, definitely your level of experience and risk appetite. And of course, you should only risk capital you're prepared, but more importantly, that you can afford to lose. Any doubts whatsoever, seek independent financial advice before you risk your capital. Okay, we're going to start off with the highlights of last week. We saw central banks raising rates, so the ECB and Bank of Canada 75 basis points, Australia 50. So Australia has just been a little bit more cautious now. ECB 75, the biggest one they've ever done. And it's nice to see them back into positive territory, I can't lie. And hopefully they'll stay there. Obviously, the reasons aren't so great, but let's just hope that they can find that balance. The biggest problem obviously is the power at the moment. And Powell, he was speaking and he remained focused on bringing inflation down. Very, very positive on that, very confirmed, determined that he's going to bring that inflation lower. In the UK, sadly, our Queen Elizabeth II, died at the ripe old age of 96. She was our Queen for 7 decades. Obviously saw a lot of changes over those times, but she was definitely a great figurehead for us to have. And also now at the same time, pretty much, we've got a new Prime Minister as well, Liz Truss. She's taken office and she's immediately put caps into place on energy prices. For business, it's going to be for 6 months, for households 2 years. Yes, they're going to still go up, but they're not going up anywhere near as much as they could have done. It's going to probably cost the UK about 150 billion pounds to do those caps. Gilts hit 3% because obviously government borrowing's going to go up. Gilts are the UK treasuries. It's the highest for over a decade. OPEC, they cut by 1,000 barrels a day. 100,000 barrels a day. I think they'd worry too much about 1,000, which is just reversing the last time that they put their quotas up. But to be honest, they can't meet those quotas anyway, so it doesn't really make much difference. BTC, Bitcoin rallied end of last week, and of course, there is that connection with the stock market, especially the Nasdaq, obviously as well, which will come up with the ETH merge as well. That's coming very, very soon. Okay, so now we've looked at what happened last week. Let's look at what we're expecting this week. So there's plenty of Fed speakers. Expect some strong but probably mixed views from them. They all know that rates still need to go up, but they could be mixed on how much they think they need to go, or not so much necessarily maybe the September 21st one, but after that. So just listen out for them. CPI is going to be the focus, obviously, ahead of the next FOMC. Gasoline prices are lower. It could drag inflation down slightly more yet. Retail sales were pretty flat. Don't know yet, but just expecting that, shall we say. Michigan sentiment possibly higher. US data still strong. There's job creation. The dollar dipped at the end of last week from its record rally. But, again, I still don't believe that's over for the moment. Against certain currencies, possibly it might struggle that little bit more. But the pound and the euro, what's going on with inflation, what's going on with power prices, energy prices. You know, it's almost as if the US is sort of isolated. You know, it's self-sufficient. You know, they can sort of almost look after themselves in pretty much every direction. You know, whereas Europe, UK, and most other countries don't have that luxury. Going back to the UK, so looking for a better GDP, not great, but probably a bit better. You know, the job offers are dropping though. I remember I've been mentioning this over the last few weeks, but there's lots of jobs on offer, but I don't believe they're all real anymore. They've either been taken up or people just haven't bothered to actually delete them. And retail sales, well, you know, we could see a slight improvement there. So CPI, we're looking for on year, which is what I look for mainly. Headline probably around 10.2%, and the core round about 6.2%. PPI year, input prices 21%, which is slightly lower. Output prices around about 17.8%, which is slightly higher. And the core round about 13.9%. Remember, we don't know these are just projections, so I'm just giving you a bit of an idea. And of course, the energy price cap could reduce the expectations of inflation. It hasn't topped out in the UK yet, I wouldn't say, but you know, all these forecasts of 16, 20%, now that the government's coming in and helping the households, in my mind, are too high now. You know, we could see it maybe 11, possibly 12 before it starts to decrease if it's going to. For the EU, we've got the ZEW surveys. You know, you've got to expect them to remain low at the moment, along with industrial production, you know, all the power costs, etc. there. They have got HICP coming out, you know, harmonised CPI basically year on year. Headlines expected around about 9.1%, core around about 4.3%. So, you know, what is the difference between headline and core? So for you guys that may be a little bit new to all of this, so CPI, PPI. So when we look at the core, which is, you know, what pro traders are much more focused on, it removes some of the more volatile products such as food, energy, alcohol, and tobacco. And of course, the big question for the EU at the moment is, will they be able to agree an energy cap? And would it be just on Russia, or would it be on all suppliers? You know, fortunately, with the UK, they can make that decision themselves these days. But, you know, getting 27 countries to agree to things just seems a little bit difficult at times. I just don't know why they just don't have a majority decision rather than it has to be unanimous. Okay, so moving on to China, industrial production and retail sales. You know, they put a rate cut in recently to 7.5%, 2.75% that is, and that could boost a little. But you would expect it to weaken further from the lockdowns, and that data from the lockdowns hasn't really sort of impacted the data yet. That's going to come a little bit later on, so just be wary of that. Australia unemployment is still around about 3.4% expectations. You know, again, you know, it's very low. There's always some people that can't work, some people that don't want to work, so 3.4 is pretty much full employment, and it's a part of the metrics that's used by the RBA for their rate decisions. India CPI is expected around about 7%. Just a little sort of heads up on crypto, if you're into that, the ETH merge is expected this week, barring any technical complications, and I'll explain that just a little bit more later on. So here we're looking at the macro outlook. You know, the US inflation's off the highs. However, household wealth is down 6.1 trillion in the second quarter. It may sound a lot, but I'll explain why it's not really in a minute. UK, more to come. but that energy cap means that we could peak, as I mentioned, about 11-12% soon. The pound hit a new low for decades at 114. Let's see what else Trust can deliver. And of course, it's probably making the Bank of England decision that little bit harder. And just because really, what's going to happen to inflation now that the government's going to absorb a lot of those costs. By the way, the Bank of England meeting, the MPC meeting, has been pushed back a week to the 22nd because of the death of the Queen. Another note, gilts hit 3%, which is over a decade high. But just remember, the gilts are basically UK treasuries. Okay, so the EU is looking to cap energy prices if they can agree. As I say, I just got to understand why they don't have a majority voting system these days. It would just make things so much quicker. The euro's under pressure. The ECB put rates up and it blipped above 1 and then went back below. But it closed by the end of the week just over 1, so just over parity with the dollar. And of course, you've got to look at the euro and say that it's closely correlated to what's going on with the gas and power prices at the moment. So again, something to look at, just something to be aware of. And also, while we're talking about gas and power prices, they impact the fertilizer prices as well. So stagflation, that could be experienced by some nations. What is stagflation? Effectively, it's inflation without any growth or very little growth. And then, of course, we move on to recessions. And as I mentioned earlier, US households, their wealth dropped by 6.1 trillion. But, we really shouldn't feel sorry for them. It's still up 27 trillion since COVID. And of course, that is still not the end of it. There's even more after that because overall, they've got an incredible $144 trillion between everybody. And that, is a reason why the US economy is still so strong. Higher mortgage rates is starting to make a little bit of an impact. It dented Q2. Plus, obviously, those lower equity valuations of stock portfolios and their pension pots as well. Energy remains the key inflation impactor, and it's just impacting so much. And Europe governments, that are they going to take action? Obviously, in the UK, they've already come straight out and done something. Are others going to follow now? And if so, if they do, then that could determine and make it a soft landing or even a shallow recession, or maybe not even one at all. If they don't, some countries will go into a deeper recession. Central banks are determined to beat inflation, and they're going to do that by continually increasing rates, even at the cost of putting countries and nations and economies into a recession. That it's easier in their mind. It's easier to fight a recession because they can reinflate again than it is to try and control inflation when they don't have that much control. They can impact demand, but they can't impact all the supply issues that are going on. And we've got this constantly. It's improving, but with Chinese lockdowns again, are we going to see? Are we going to see basically a slowdown in the supply chain recovery? Semiconductor supply is still lower. However, demand's decreased as well now. When we look at Russia invasion of Ukraine, 6 months now, grains are being exported, and Ukraine now is having actually a little bit of success of regaining ground in the north, which is amazing. And I think it surprised the Russian army as well. When we look at food and energy, prices are still high. They're not as high as they were after Russia invaded. But, you know, again, you've got to look at other impactors as well, such as the weather, you know, fires, droughts, etc., and supply and demand, of course. And I'm still not sure why there seems to be such a shortage of workers, or indeed so many jobs available. And this working from home is still preferred by so many people to returning to the office. Perhaps that's one of the reasons, and some of them would rather give up their job than do that, and then just find a job elsewhere. As I mentioned, crypto, the ETH merge it should occur this week. There's no guarantee, but it's supposed to happen this week. And this is where they go from change of proof of work, POW, to proof of stake, which is POS. And it should reduce energy usage by, listen to this, over 90%. You know, the miners for ETH basically use as much energy as Chile as a country does. So that will be a massive saving. Japan's ready to intervene in Forex if the yen gets any weaker. The stocks rally on Friday and slight USD weakness ended a 3-week losing streak for stocks. Part of that is the hope that, you know, maybe the Fed are past the worst of what they're going to do in the way of rates. That, you know, there's going to be more increases, but maybe they're going to scale them back. You know, we maybe see 75 in September, maybe only 50 after that, and then maybe only 25 after that. But of course, we'll have to wait and see. And as they say, it really depends on the data. Now, Biden's holding back scrapping Trump's tariffs on China. As I mentioned, China inflation is lower due to the lockdowns. The currency, the yuan, is weak, and that is impacting their commodity demand. Oil steadied at the end of the week on Friday. It touched 81 during the week, and then it managed to have a bounce back to 85, 86, touched 87 actually. And gold's been slow to rally from the 1700s. It did have a little rally on Friday, but not a big one. So that's sort of the macro outlook for